Anne Gannon joins me here today. You could learn what her team is up to by heading over to thelargogroup.com. That's going to be a clickable link in the show notes. We're going to be talking about saving money on taxes, which is always a hot item, and especially around short term rentals, which is also kind of a hot topic. So, really appreciate your time here today, Anne.
I'm really excited to be here.
Well, you just released a book. Let's start there. Real Estate Accelerator. I'm going to have a link in the show notes for this as well. Could you talk a little bit about what caused you to write the book and what it's about?
Yes, so I think it's important for people to see real estate as not just the short term, because obviously a lot of what you see on social media now and what you see on everyone who's talking about saving money in taxes, a lot of it's about the short term, right? How much can I make on this year? What's my return on my investment? And I think what gets lost there is the underlying appreciation, the asset of. So a little bit myself, I've been a CPA for over 20 years. I deal with both individuals and business owners and self. So I see a wide range of clients every year. And I like to joke that my be it retired clients are actually the ones that invested in real estate. So the goal of Real Estate Accelerator is not just about what here, but it's just that idea of I buy a property today. Maybe it's even break even for the first 2 years. Over time, I'm paying down the mortgage and I'm truly growing and putting in my overall net worth through this what seems sometimes small investment in time and energy right now.
So, let's talk a little bit about the whole. You're the second person recently, and I know of somebody else who is focusing on business acceleration, but I think they mean it in a different way. So, this is kind of interesting.
Yes, we use Accelerator a lot just because I think it's good to realize that your decisions today can compound and grow into something much bigger tomorrow. And I think as business owners or as individuals, sometimes you get caught up in last year, or you don't see the growth that's happening. And I think it's a great exercise to look at your personal financial statement or overall net worth because that real estate piece or even business piece has a big part in it today, but it can start to really compound in your favor over the next 5 to 10 years. So I think whether you're an individual investor or business owner, but good to think in those terms, or at least a couple times a year, just to see the growth that you've actually already achieved.
So, could you talk a little bit about what sets apart? We're talking about short term rentals in particular. What sets apart those businesses that are growing in that space, in your opinion, versus those that are stagnant or collapsing?
Yeah, so I think what happens in short-term rentals is first it's new or newer, right? I'm sure, it's been around a while, but it definitely becomes something that people have focused on more recently, the last 3 to 5 years. Technology plays a big part in that. Social media plays a big part in that, introducing people to the values of short-term rentals. So a lot has changed. And I think the people that were in it beginning, was just sort of this, hey, I want to buy a property on the beach and maybe I'll rent it out a couple of times a year and maybe I'll use it. A lot of shared spaces where I'll rent it when I'm not here. And I think it's really become a much more sophisticated investment that you have people coming in and staging properties, really making them look as Instagrammable as they possibly can. I see everything. I got an email the other day from Marriott that's starting to have properties that are rentable. So it's become a very sophisticated business to where it was 5 years ago. So I think the people that are doing well in it are very mindful of that consumer, what they're looking at, how do I market it, and not necessarily just throwing it out on Airbnb and just assuming it's going to. So I think it's taking more effort to do well than it did at the beginning. But that being said, because of things like Airbnb and VRBO and all those, the returns are definitely still there. So I think people who are doing well are well educating themselves all the time and they're really trying to stay ahead of new and emerging business.
You mentioned the Instagram thing. We see this in the flipping business as well. We have the flip my house type shows that kind of romanticize the whole idea. Do you run into a lot of, since you're the CPA associated with this type of work, do you find a lot of people kind of falling in that trap where it becomes kind of a romantic idea versus it actually being a practical business?
I think at the beginning, it's very easy to fall in love with what someone said online your rental income was going to be, and to think that that's what's going to happen the minute you buy the property. I'm going to get, ticketed revenue, and whether it's social media or you're listening to heads or you're watching shows, which is very true in the flipping world, but they have a whole flip in 40 minutes. You tend to think that it's not, and I think the people that I see that are the ones that are really grinding it out every day. Even if they have a full-time job somewhere else, they're still very invested in the property, doing everything they can every day. So I definitely does get romanticized, the dollars that are there. I think the other part is, again, not being as reliant on one place. People think, "Oh, well, Airbnb, it'll just book itself and there's nothing I need to do." But the people who are the most successful in states are also going out to the hospitals because there's traveling nurses who might need a place to stay. It's really thinking outside the box, looking for a short-term rental and not just pigeonholed to the tourists who show up in July.
You're going to have a different approach or a different viewpoint regarding this next question because a lot of real estate investing professionals are pushing the concept. From your perspective, though, as a CPA, where should somebody start when evaluating a property to determine if it's a good short term rental?
Right. So I don't disagree that you do have to just get started, that as much as you could take a class or follow someone online, there's nothing better than learning by doing, right? So I do think having that realistic expectation of this is going to be my first property, but it's hopefully my first of 5 or 10, but I'm going to learn a lot in the process of starting this first property. I think the other part is ideally in the area, because a lot of what I run into with people who aren't as successful as hope to be is they just bought a property online. They didn't really know the area. Not necessarily it has to be where you live, but I think you have to be very familiar with where you're buying. Because otherwise, sometimes you're frustrated because I don't have rent through November. Well, you probably won't have, if depending on where you are. Right? I recently had a
Yeah.
call with a client who bought in Orlando, and they're frustrated because they don't have renters right now. I used to live in Florida. I know that no one's going to Orlando before mid-November, and then March is probably going to be the same thing at winds down. So you really have to know what you're buying. The other thing is people who are mad that was going to Orlando, well, they just got hit by a hurricane. It may not be on the news, but I people in Orlando still are struggling to just clean up. So you again, I think you have to be familiar with what you're buying, have realistic expectations. And I think the other piece is it can't just be a decision, right? A lot of people are running to short-term rentals right now because of all the crazy amount. Like I joke that I knew cost segregation before they were cool, but now everybody is talking about a cost segregation. But again, I think if we can take a step and look at the long term, the investment still like it can't just be I'm going to get more dollars on my return here, but I really want it to be something that I set it there's 5 or 10 years.
Well, let's tackle that a little bit then regarding short term rentals. You already mentioned cost segregation. I've had guests on the show talking about this in greater detail, but more in multifamily space. Could you talk about some of the tax savings? And
Yeah. So the biggest one when you look at short term rentals is the fact that if done correctly, not and again, this is not everybody qualifies, but if done correctly, if done understanding the like, potentially it's ordinary income or ordinary loss. But potentially it's not passive anymore. And the reason is, the IRS gives 4 criteria, but one of the one that's the easiest for your non understand would be that you're renting for a much shorter. The idea is rather than having one renter in there for a whole year, where that really is the rate you at least once a year, and otherwise kind of on autopilot. That your short-term rental, you could have 30 people in your property a month. And so for that reason, it potentially could be considered victim participation or against ordinary income. So as an investor, that becomes something that's very appealing because unlike the rental, which may be the amount of the loss that you could potentially take, some of those losses even negated completely depending on your income level. The active participation, you could take the loss and offset your other ordinary earnings. So for a higher wage earner, that's very attractive. I think that's where you get into cost segregation, right? So now if I know that I can apply it against my W-2 income and I make 300,000 a year in W-2 income, and now I have a property I've put in service and I'm able to write off more, appreciating it more. That first year can look like a crazy good tax return, right? Like all of a sudden you have significant dollars coming back to you. Where I think that stuff is what happens in two, right? Is it a good long-term investment? What I like to do is just educate people because I think so many of the talking heads online are one size fits all. Well, I've had people where we've gone the road and actually realized you're probably not better off taking a cost variation this year because you might be better off applying that depreciation over the life of the asset because you're going to have income over the life of the asset. So depending on your long-term picture, maybe we're better to do. But I think ultimately that's where you see the rush to short term. It's just that the people see dollar signs and they see, oh my gosh, save all this money. But I think what they forget, but sort of like planning for the wedding instead of the marriage, like you own this property for more than 1 year. So let's make sure it's still a good investment, a good decision for your life. And if it's something that you want to do, not just the 1 year of the great.
I've run into a lot of other CPAs and lawyers for that matter that are adverse to sitting down and actually strategizing with the people that they work with in this way. You seem to be really open to that.
So I don't really look at it as giving them the answer. I look at it as educating people on something that to me I'm very passionate that people think too many times when you get into, I would say both the legal and the accounting world, you the old school mentality is I show up with the box and you're gonna do my return and I'm gonna just it exactly and you're gonna tell me what I owe or what I'm getting work done. And I think to me the biggest lesson, especially during the COVID times where we go a lot of businesses where things are just thrown on their head. To me, whether it's your individual return or your corporate return, you as the owner need to know it more than I do, right? Because there could be things that I'm seeing P&L, real estate on your property, and I could be wrong, right? I could be looking at a number that was put in incorrectly. I could have the wrong form. So if you, the owner, really understanding what's going on in the return, I think it just leads to a worse result. So what I try to do is not give you the answer, but at least walk you through this is what's happening on your return now. This is the tax you're paying. This is your effective rate. And if your question is what would happen if I bought a rental, well, let's look at for your return. For everyone's return, this is your return. If you bought the rental, this is what would happen to your effective rate. And let's walk through what it would look like to own the rental for 5 years. Ultimately, then what you're investing in, even with working with the group, is you now have knowledge. My goal is you don't need first, right? If you know how to build a tax strategy and you can go look and apply that to whenever you go. Without that knowledge, you're always dependent on your professional that you're working with. If you don't leave this conversation understanding your picture, then I feel like I'm done.
Just to remind everybody, head over to thelargogroup.com to learn a little bit more about what Anne's team can do for you. Again, it's thelargogroup.com. That's a clickable link in the show notes. If you found some value in what we're talking about so far, do us a quick favor, share this with one of your investor friends. If you're watching us on YouTube, give us a quick like and subscribe. A lot of people who start into real estate investing, even short-term rentals, they're going to try to do a lot of stuff on their own. They're one-man bands and they're trying to get things going or off the ground. What type of advice do you have in order to get the bookkeeping side?
Yeah, so actually, one of the things I did early on in my career was taught at college part time, and that was very eye opening. And just, I think the first place to start is the afraid of accounting, right? And I think so many times people have a mindset of, "Oh, understand this, that it's weird. I really care about real estate. I don't care about accounting." And I think the first thing we all have to be aware of is accounting is everywhere, really. The rule book. So we have to understand it if we're going to play the game. And so I think we have to find a way to build in the accounting into what we're doing, at least on a weekly basis, even in real estate, because then it will never snowball into something that we're sitting down in December and we're frustrated. We have no idea what we need on the property, and cash, and all of the things that just become overwhelming. I think become overwhelming because it's just part of what we do every week. So if we can find a way in our property to just check in every week, I think software can help us with that. But even if it's just on Excel and we're looking at the revenue we took in, we're looking at the expense took out, and we understand how our cash balance became our cash balance. Well, that's really the starting point of accounting, right? It doesn't have to be complicated than that throughout the year. But I think even just doing that little bit, by like 10, 15 minutes a day, maybe real estate is a little less, but maybe 15 minutes a week, it's not a lot. But when it gets to be a lot, it's just because we ignored it and intentionally don't want to look for 10 months. And then all of a sudden we have to look because our CPA is being sending me my information. And now I'm irritated, right? But I think if we could make it simplified, and again, putting it in the owner's hand is so important, find a way to work with it yourself because that will lead to being a better investor.
Yeah, a lot of people, especially, I don't know, but or just they don't like working with the numbers. They put their heads in the sand and they avoiding the pain
Yes.
eventually. They don't want to face the reality of what might be going on.
Yes. When in reality, if we can just look at it, you'd rather know than right. So if you're losing money in your property, you'd still rather know than not know, because then you can come up with a solution. Sometimes the fear part is actually worse than the reality of whatever it ends up being. So I still think even if it's a bad answer, we'd rather know that.
So let's say a lot of people they just would rather pick a CPA to handle a lot of this for them. What type of questions should they ask to make sure that they're a good fit?
Right. So I think, and again, I'm not saying you're never going to need a CPA. And I think it's just, you want to find somebody who is able to talk to you, that you're able to question. And I think ultimately, as owner, don't be afraid to ask questions. I think sometimes the old school mentality, even on some of my peers in the CPA world, they don't want to have to sit down and explain to you the tax. That's something that they don't have time to do. But I think as the person who's paying them to do it, don't be afraid to say, like, hey, can we just look at my Schedule E, which is where a lot of the rentals go? Can we just look at it together quickly? It's 5 minutes. Just make sure that I understand what it's worth saying. Because at the end of the day, you feeling comfortable with the forms, as weird and horrible as they make them look, it's important that you feel comfortable. And then I think it will lead to a relationship launch. So I think not being afraid to have those conversations is probably the best place to start.
One of the things that I've definitely learned too is that some CPAs in the market, they frankly just don't have the niche or the experience in the real estate world. And you really need to spend a minute to find somebody who knows what you're talking about.
Yes, and in their defense, up until 5 years ago, real estate was sort of just this, like, thing that was thrown on the return. "Oh, you have a rental property. Let me just throw it on." It was sort of the one that got the least attention, where your operating business, a restaurant or cleaning, whatever it was, construction, that got 90% of the attention, and the rental was just half of the rental. Well, as they've gotten more complicated with STRs especially, you mentioned flipping, maybe you rent it for a year and then you sell it. All of a sudden, like, it's important to make sure those numbers are correct, cost basis in the property, money invested, all of the things that are very important. And I think now it's just make sure your CPA is paying attention to those things now and they're getting it right now, because it could make a difference when you go to sell later on.
Earlier, you mentioned that taking a look at your books and your accounting and making sure that it allows you the opportunity to adapt to the situation earlier in the process. Can you talk a little bit about somebody you might have worked with that had a similar situation that they were able to turn a property around because they were mindful of that?
Yeah, so actually a few of our SDR clients are great examples of that, because a lot of the automation kind of leads you down the road of thinking, okay, I'm going to set it up on Airbnb and there's like price labs that'll the price and they know everything. But as the owner of the property, you still have to know what you need to collect to break even every month. And I talked to a client who owned property up in the Poconos a few weeks ago, and she had actually turned off price because she's like, I know I need another $1,000 before the end of the month. And so I'm going to reduce my rate below what it's telling me to do because I want to break even. And she did, and she got booking right away. Said like within a couple hours, she already had a booking. And she was so happy because now she made a great strategic decision because she knew her break even point on a monthly basis. And so that's where I think the power of the numbers, because she wasn't just ignoring it, because otherwise, right, she would have gone on. She probably wouldn't have gotten to her $1,000 goal. She would have lost money for the month. And she just would have been frustrated with the investment, which really it's not the investment, right? It's how you're managing that investment. And that's where putting it into your weekly routine, you really can impact the overall performance. And that's where I think my biggest passion is just putting it back in your, because now you are in control and it's not just the bookkeeper or the PA at the end of the month.
You've probably run into quite a is there a recurring issue that you continue to see time and time again that you wish people would learn already?
I think in the real estate, I think what you're up against is the unrealistic expectation of the get rich quick. I think with the people who got into short-term rentals early had crazy stories of how much they were able to make and the profits they were able to get. But I think today's real estate market is different, right? Prices have gone up. You're paying more for property. You're paying more in interest than those people who bought in 2020, right? And this doesn't mean that it's a bad place to put your money or that it's a bad long-term investment. But I do think just being aware of the talking heads on social media may not be who it'd be easy to film yourself talking about how great you are and all the great things. So I think at the end of the day, kind of getting your life, what you're trying to do, your investment, and setting your own goals, that's really the biggest thing. Is even what it's doing, it's what it's doing versus what crazy things you thought it was gonna do that really weren't always in reality.
No, that's a good point, and we joke quite a bit, and I've asked a few of the talking heads as you mentioned, is if the real estate market is so great, why are you selling your course? I mean, it's
Right?
not.
Same thing, but big thing. Like,
But anyway, that's a different topic for another time. Well, before we jump into the rapid fire questions, did you have any additional thoughts or anything we should have covered before we move into those and close out this episode?
no, I think this has been great.
What lie do real estate investors sometimes tell themselves?
How much money to make.
Yeah. This has just been an ongoing thing, even from when I was little, seeing the infomercials that just real estate investing is just mailbox money. It's just super easy. If you could go back in time and give your younger self one piece of advice, what would that be?
Invest in real estate for the long term reasons.
Yeah.
Definitely.
Sure. Do you do any investing yourself?
I've started to recently, but I took that my first property I bought, we sold a couple of years later at a lot. Ah, that's how you understand the power of inflation a lot.
Do you have a book recommendation or what are you reading right now?
I like to listen to audiobooks. So I would say probably my favorite audiobook right now I'm listening to is 10X Rule.
So, what single strategy, process, or tool have you implemented that has had the biggest time saving impact to you or your business?
So I would say for me as a business owner and entrepreneur, it actually is. I had listened to a podcast recently that talked about taking your time. I can download an app on my phone and I track my time every day throughout the week and then look at it once a week, see how much time I've allocated to the different areas that I went to. That was actually eye-opening because sometimes the monkey mind, you think like, oh, I've done it so long. And then you look at the hours and you're like, it really wasn't that long. But it wasn't that. I would say that has had the biggest impact.
I hope you'll consider coming back again sometime. This is great to meet you.
Yes, this was great.